Think Realty Nation, it's Abhi. Welcome to the Think Realty podcast. I'm excited, really excited for this show. I'm going to have one of my really awesome mentors. I don't think he knows he's a mentor of mine yet, but he's about to. His name's Gary Beasley. He's the CEO and co-founder of Roofstock. When we had the Think Realty radio show, I interviewed Gary a bunch of times, and we kept talking about different markets and what Roofstock was doing. And we also talked about Roofstock One, if I remember correctly. So I'd like to kind of touch on some of these things and also talk about some of the success that he's been having in the space recently. And I have a whole list of questions from 12 to 13, 14 questions. So I'm excited to start asking those and getting some answers. So it's going to be Gary Beasley from Roofstock in just a second. Afterward, we're going to talk about inexpensive sources to find your next investment outside of course, going to roofstock.com. So I'm excited to have the conversation and look into some of these inexpensive sources because, quite frankly, I'm an investor. I love single-family rental, and there are far too many people in Atlanta, and I'm banging my head against a wall trying to figure out where to go to find deals. So I'm excited to have this conversation with Gary, but before we do, need to let you know who this podcast is sponsored by. This podcast is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. You can learn more by visiting realpropertymgt.com or by calling 888-806-7088. Now, ladies and gentlemen, it's Gary Beasley. Gary, welcome to the show.
Great to be here, Abhi.
All right. So give us a little breakdown. I know I've interviewed you, I feel now, a bunch of times, and I have such a fun time doing so every single time. And for those of our viewers that don't know who you are, give us a little rundown of who you are and what you do.
So I've been at the intersection of real estate and tech for most of my career. I run Roofstock now, co-founded that about 4 years ago. We'll talk about what we do, but we're a marketplace for single-family rental homes where they could be bought and sold with tenants in place very efficiently. But I've done in my past, I've done some traditional real estate as well. I've done hotels. I used to run a hotel management company. I did hotel acquisitions for many years, and I was also at Zip Realty in the early days as the CFO of that business when we took it public. So I've had kind of a good mix of traditional real estate as well as more progressive or tech-driven real estate.
Nice. And so you've had a bunch of experiences in this space. What was the driving factor to help found Roofstock? What made you kind of like make that leap? And you're like, okay, this is a marketplace that I see a need for, and we're going to go dominate it, which is what you're doing right now. So.
Well, what I realized was we were trying to sell rental homes that had tenants in them already, and it was very difficult to find an efficient way to do it. We were vacating homes and selling them through the MLS, or we were packaging them up and trying to sell them in bulk to buyers, and it was not a very efficient process. So the very simple idea was, why don't we certify individual homes and have them inspected, and certify the tenant, the home, and local property managers, and sell that home as an income property, much like a little apartment building. Very simple idea, but we had to build our own platform to do it, and a lot of technology around doing it efficiently. And so it was really a way to make it much more efficient for sellers to not have to vacate homes to sell them and do it at a much lower total cost, and then make it much easier for buyers to be able to step into cash flow day one, especially buyers who want to buy remotely. Over 90% of our buyers are buying where they don't live. So it's really important for them to have real visibility into the performance of the asset and the physical characteristics, have a management solution, and really trying to break down those geographic barriers for investing.
So help me understand, for somebody that is just kind of meeting you for the first time, and they're now like going on their browser to www.roofstock.com. What's the business model? How exactly does Roofstock work?
Very simple. We earn fees when properties trade through our platform. So we typically charge 2.5% to sellers and 0.5% to buyers to use our diligence information and our closing platform. And on the sell side, we charge 2.5%. And that's the total cost of everything we pay to have the homes certified. we pay all the marketing costs, and that fee's only paid when transactions close. So it's pretty straightforward.
So if I'm a individual investor and I'm looking for opportunity, is it, or I'm a large investor and I have an appetite, say, for 10 properties a month, and I want to deploy a whole lot of capital. Who's the type of investor you're targeting, or is it maybe both types? Does it not matter?
It is actually both types. So
Okay.
we have an unusual model in that we can cater to a small investor looking to buy a single home or even a share of a home, all the way up to some of the largest real estate investors in the world who are investing hundreds of millions of dollars through our platform. So, but we have different products and services for the different investors, different teams who focus on it. So if you come to us through our website, you will see all of our retail properties for sale, and you could speak with some of our advisors who can help you navigate how to use our platform to buy or sell. And if you're a large institutional investor, we have a different team that covers those folks.
So when it comes to the asset class that you're trading on your platform, it's primarily single family, right?
Correct. It
Okay.
is today. It's exclusively single family. Single family for us is 1 to 4 units,
Yeah.
but we're not currently doing multifamily or anything like that.
So I'm sure you get the question all the time. Well, there's so much opportunity also in the large multifamily or commercial real estate space. Why not expand the model to encompass those asset classes as well? Or those asset types as well? Is that something that is maybe on the horizon 5 or 10 years from now, or are you just saying no? And if you're saying no, why are you saying no?
For now, we want to stay focused on residential. Some of the commercial sectors are much better served by incumbent players. One of the reasons we built Roofstock is it was not. There's a lot of white space to address residential investors. So that's what we're focused on right now, is in particular the single family rental space, which is quite new. I think rather than getting into the large apartments, the next place we will go will likely be smaller, non-institutional multifamily, kind of sub 50 unit that has similar characteristics and is about a similar asset class size as single family rental.
So from the retail side specifically, are you geared more toward the sellers, or are you geared more toward, on the flip side, the buyers?
Great question. We need both, right? So I think when initially with any marketplace, you're typically constrained more on one side or the other. When we first started, we had supply, we didn't have any demand. Then we built demand, and then we started to catch up on supply. So I think it really depends. But for us as a marketplace to create liquidity and to be successful, we need to cater to both. And I would say now we're finally starting to unlock retail sellers, where a year ago, and I probably talked to you, Abhi, maybe a year ago,
Yeah.
Versus today, we have 10 times the number of sellers today on our marketplace than we did a year ago. So
Wow.
that's just now about 20% of the people coming to our website also want to sell. So we're starting to feel some of those network effects, just having been around now for a few years. And people a lot of times come to us and they'll sell their first property through us because it's cheaper. And then a lot of times they'll sell more properties through us because it's easier.
So where's the stronger value proposition? Would it then be on the buyer side because there's already so much demand?
I like to think that it's really strong on both sides. On the seller side, fully loaded, it ends up costing you about 10 or 12% to sell a leased home in the traditional way. And the way I get there is a 5 or 6% broker commission, several months of lost rent, and then some CapEx to sell it on the MLS. So that could be 10 or 12 points. It's 2.5 on our site. For buyers, so that's very strong. For buyers, the big value prop is you don't have to hop on a plane and go look at things. You don't have to make a bunch of offers without knowing you're going to get something. It's a buy it now model. So you could buy it at the listing price. Everything on our site, you could buy like that, or you can make an offer. You could bid down. So it's a real convenience factor. And we have a lot of tools and things that make it simple. And then you're also acquiring cash flow day one. So you don't have this initial subsidy and renovation period that you would have if you're buying a vacant home that needs some work. So I think it really depends. Yeah. I like to think the reason our model's working reasonably well is we do have a very strong value prop on both sides.
So I really like that about the platform, right? I have deep analytics into the property. And I've been on roofstock.com a lot of times. It's weird how much I just like know about like the layout of the site, which is kind of funny, and how everything looks, which is a testament to what you guys have done. I mean, it's fantastic. So when you're on the site, you can click through a property, you can see all the details of the property and all the other factors that you wouldn't even think of as a first-time investor if you're interested in learning more. And the other piece too, what Gary's saying, and I'd like to reiterate it, is you're walking into an in-the-money situation day one, right? Like it is cash flowing day one, which is fantastic. And you have resources for property management. If I don't have those resources locally and I'm looking at a property, say in Indianapolis or Detroit or Chicago or wherever, it's going to take a second for me to get a really good grip on, is this property manager a good one or is that property manager a good one? And I don't know, but you provide some of that independent thought behind that, and I know they wouldn't make your platform if you didn't vet them out. So that, to me, gives me a lot of comfort. Are there a lot of competitors in your space that are doing what you're doing?
It depends on the segment that you're talking about, because as I mentioned, now we're catering to large and small investors. So I would say our biggest competitor is probably the traditional way that people could acquire homes and own them. So Abhi, if you're looking to buy a home in Charlotte or Memphis, Orlando, you would go down there, start making offers and working with traditional agents and do it more of a DIY approach, find a local property manager. There are no other platforms of scale that are doing what we're doing in a marketplace format for retail investors. And then on the institutional side, we're really competing for investment dollars across other asset classes. I think what we're seeing now is a lot of interest from large groups wanting to put money in U.S. housing as an alternative to either other real estate asset classes or even the equity market, which had a great year, but it typically is more volatile than the underlying real estate values. And I think given how late we are in the cycle, I think people are starting to look at single-family rental as a pretty defensive play, and as a sector, which I think we've talked about previously, that actually did, from a rental standpoint, quite well during the last downturn. And I think people are starting to think about what it's going to be like over the next kind of 2, 3, 4 years when we do presumably see a little bit of a correction.
So let's talk about some of those trends, because that is a really big top of mind potential concern for folks here in the next year, 2, 3, 4. I mean, if we're calling for a correction and we have big media that's saying, well, it's kind of due because it's a year number 11 and a half. What trends are you looking at to identify either markets to invest in or just where, how do you navigate those waters? What are some big trends right now that you're riding?
Yeah. So I think you're right. We are 11 and a half years or so into this expansion. The question is, when does it end and what will cause it to end? I think what we're seeing in a lot of the data around the country is home price appreciation rates are slowing. So markets that might have been growing at 6% a year might be growing at 3% a year from a price standpoint, seeing things taking a little bit longer to sell. So a little bit of a softening. It's definitely not soft because the months of inventory is still not that great. There's still a shortage of inventory, but I think you're seeing more of a natural kind of slowdown, which to me means the correction is much more likely to be a soft landing than anything close to what we saw previously, which was unprecedented. To remind everybody, we had 5 years of declining home prices from 2007 to 2011. That had never happened before in post World War II. In fact, we'd never had a single year of absolute price declines nationally during that period. We had a lot of regional ones, but if you had a large portfolio of homes, they always went up at least a little bit on average. So that got turned on its head during the last real estate recession. But rents in single-family rental homes never went down on average either, because if you think about it, there were millions of people displaced. They were now renters. So that's supported the economics of that rental investment. And then now the prices of those homes have come back, and in most places are at or above prior peaks. But the rents have also risen. So you have I think a reasonable equilibrium in a lot of these markets where you'll see more modest home price appreciation. And we encourage people to really think about where jobs are going. And if you look at job growth and population growth, a lot of times that does drive real estate values. And so we have a lot of research on our site, and you're constantly encouraging people to think about their thesis, what they're looking for in their investments, and we can help them find the markets and assets that meet those needs.
Yeah, I agree with you. I mean, if you take a look at what I'm kind of hearing on the street in terms of the thesis and what it should be, I think for me, I'm looking for cash flow. I'm looking for. I believe in the United States of America. I believe this economy is going to be, and it will continue to be, a powerhouse for the next many generations to come. And I feel single-family rentals make sense. And if I'm a flipper, I need to really take heed of this information and go put my money to work and know that there's some type of passive income vehicle that I have that's coming, and I can step into a product that is cash flowing day one. And I think that's really, really important. 2 or 3 more questions for you. I know you're busy. I don't want to take up too much more of your time. What is Roofstock One? Help me understand a little bit about that. I heard about it last year. I know you and I talked about it. For those of us that don't know, give us a little 1-2 rundown.
Sure. About a year and a half ago, we had an offsite at my house, actually, trying to figure out how to solve for an instantaneous transaction. Because the vision of Roofstock has always been, how do we get to the Amazon one click of a real estate investment? And we realized what all the challenges are with a traditional transaction. People have to get a loan. There's the need for title insurance. You have to get an insurance policy. So all these things, and then you have the traditional escrow closing. With Roofstock One, we turn that all on its head. We actually buy homes at Roofstock. We renovate them. We put tenants in them, and we asset and property manage them. And we sell off the shares. And so what you're doing is you're investing in the equity of a home, much like you would invest in the equity of a company. It's actually a security. You have to be an accredited investor to buy the securities right now. That's where we're starting. So keep that in mind. But the idea is it's very simple. You don't have to get a loan. You're not on title. You don't have to get your own insurance. But you get all the income and appreciation, exposure, tax benefits, et cetera, of what you would have if you were on title. But you're not on title. You're just buying shares. The properties sit in the vehicle for presumably forever, or for as long as we choose to keep them in there. And then to get liquidity in the future, you could sell your shares to another investor who wants the exposure that you have.
That's really nifty. I mean, and you take. And I mean, that makes sense, right? Like, and you also have the opportunity to take advantage of a single-family rental market, which makes sense.
Yeah,
like that's huge.
Yeah, the idea there is, rather than, and it came out of a number of phone calls too that a number of us had with clients or potential clients who said, I can't find the exact home that I want.
Right.
And what we said is, well, geez, if we could break it down into tenth shares, and so a lot of these shares are $5,000, $6,000, $7,000. Someone with $25,000 or $50,000 could invest across lots of assets and get diversification for less money. So you don't have to wait to buy that perfect one home.
Yeah.
You could get exposure. You say, I might like Atlanta, or I might like Indianapolis, or I might like Texas. Then you could do that. And really think about it as kind of creating your own REIT. People invest in REITs for diversification.
Yeah.
You can sort of pick your markets this way and buy shares of homes in different places.
Yeah, you took the words right out of my mouth. I mean, and for me, if I'm really OCD about picking that really specific winner of a property, and it has to meet every single criteria, it might take me a while to find the perfect deal, especially right now, right? So if I'm an accredited investor, go to Roofstock. Is it roofstock.com/one or roofstock1.com? I can't remember the website.
Yeah, if you just go to roofstock.com,
okay.
There's a call out. You could click through to say, I'm interested in buying shares of homes.
Perfect. I think that's a really great solution for for those of us, especially me, somebody that's a little OCD, and I'm always going to be like, well, I don't like the floors here, and like this door sucks, and like I'm looking for the most perfect. You get it, right? Like I'm a diva like that. It's never going to work. But Gary, I'm excited. You're going to be at the Think Realty Conference and Expo in Baltimore, and you'll be speaking there as well. And I'm going to be in the front row writing a bunch of questions just like I have today and asking you. And I'm excited to meet you and see you there as well. So looking forward to that. Do you have any gold nuggets on what you'll be talking about? Maybe a couple spoilers, perhaps?
No, it's all going to be a surprise.
Oh, man. All right. Well, then I'm going to have to like be there in the front row. That's exactly what's happening. If you want to meet Gary and you want to see him speak, that's the Think Realty Conference and Expo in Baltimore from March 21st to the 22nd. You want to get tickets, go to thinkrealty.com/Baltimore and get them today. Gary, thank you so much. I appreciate your time and talking with me a little bit about Roofstock.
Thanks, Abhi. Enjoyed it.
You got it. We'll see you in Baltimore. Think Realty Nation, this next segment is brought to you by Residential Capital Partners, a leading hard money lender with a national scope and a local presence in each market they serve. Their partners and loan affiliates have flipped well over 1,000 properties themselves. They know your business, so visit them today at residentialcapitalpartners.com. So if we start talking about sources to find good investment leads, I'm just going to I've decided to go a little off script on this. There are a couple of sources that I've found to be really useful. Outside of wholesalers and outside of real estate agents, I love probate leads. Why? Because you can have a really amazing impact on a family that's going through a tough time, and you can help them out of a crisis. So take a look at probate leads. The other piece that I love looking at are tax liens. Now, you have to research how tax liens work in your county, but it could be a very viable solution to find deals that nobody else, no other real estate investor is taking a look at. Number 3, number 1, 2, and 3. Number 3, take a look at tertiary markets, secondary and tertiary markets. Example, Atlanta is a primary market. Alpharetta, secondary market. A primary market has over 5 million people generally in population. So this is the way that you gauge your primary, secondary, and tertiary. Primary, over 5 million people. Secondary, 3 to 5 million people in terms of population. And tertiary, less than 3 million people. So if you have a kind of that segment and you're looking at opportunities and you're looking at, say, Atlanta that's growing like crazy, it's growing like gangbusters, affordability tends to be a little bit of an issue. Right? So if affordability is going to be a little bit of an issue, where are you going to find properties that are more affordable? In Atlanta or outside Atlanta? Think about that. That's right, outside of Atlanta. So start driving around. Start looking at communities that are located by major public transit, a little outside of Atlanta, and the price points start dropping a little bit. That's where you should start looking for properties, maybe meeting up with wholesalers, but more specifically meeting with real estate agents and realtors and brokers first, because they're the ones to give you those insights into that market, and they're most likely to live there. So those are the 3 sources and a couple of tips. Highly encourage you to use them, especially right now when people are buying properties and not paying attention to the buy price because there are 20-something number of people bidding on the same property. So be careful. If you have any questions, of course, get in touch. You want to go to thinkrealty.com. This entire podcast was brought to you by Real Property Management, which is the largest property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. Think Realty Nation, it's been real. Gary Beasley, he's an awesome mentor, great friend. He's a CEO and co-founder of Roofstock. He's going to be at the Think Realty Conference and Expo in Baltimore, so you want to be there. And he's somebody that you should connect with and ask questions to. And if you want to check out roofstock.com, get all the data, analytics on properties you're looking at, and of course neighborhoods that you're dissecting to see whether or not it's a deal. So you want to get in touch with me, you can do so anywhere online. I love Instagram and I love LinkedIn. Those are my 2 favorite platforms right now. And I'm also starting to check out TikTok, so you can find me there as well. Anyway, that was the show. Got any questions? You know how to get in touch. Read the magazine, go online, read a bunch of stuff, make some smart decisions, and Think Realty Nation. Until next time, happy investing.